as Chris said, this is a panel that I've been looking so much forward to moderate. I've been looking forward to. It's a privilege to be here for Invest Finance Global Summit, but it's a really great privilege to talk about B2B partnerships. I have been working with partnerships in finance for more years than I care to mention. And yet, this is a subject that has really grown in the last few years, and it's no surprise. I mean, as an example, in 2012, in Copenhagen, we tried to set up a startup weekend with the theme finance. That was so weird that people had to go all the way to New York to ask if that could really happen. And just look at yourself, look at this venue, look at what's happening all over the world, and how the ecosystem is changing. So I think it's no wonder that we need to reframe and re-talk about B2B partnerships. And I'm really happy to have a really great panel with me here today. And I'd like to ask the panelists to introduce themselves, and they will share perhaps a small introduction also to their businesses and their partnerships so that we can get started right away. So, Felicia?
Hi, everyone. I'm Felicia from Akoni. We are a cash management platform. We work both directly with clients on a B2B basis, as well as on what we call a B2B to X basis. So we work with a range of financial institutions, deploying mainly via API, but we also have a branded solution. And obviously that deals with the customer acquisition side from our perspective, and it deals with the product delivery side from our client's perspective.
Good afternoon, everyone. I'm Damien from the Monetary Authority of Singapore. Specifically, I look after two aspects within the MAS. One is on fintech infrastructure, and the second one is on fintech ecosystem development. And the topics about partnerships is very important for the MAS when we develop the fintech ecosystem itself, because it's not comprising of only stakeholders within the financial industries, but also stakeholders with the fintech, the stakeholders with academia, stakeholders with the rest of the government agencies, who are very much part of this partnership and collaboration.
Hi there, my name's Adam Toms. I'm the CEO for OpenFin here in Europe. OpenFin, if you're not familiar with it, is like an OS layer. Think about your mobile phone, iOS and Android, and all these great things it can do. You can add and delete apps, you can connect them together to create a seamless experience. And then think about your desktop in work, where none of those things actually happen. OpenFin actually allows that experience to happen on a desktop. And this is really relevant today because of one of the big things we're doing is enabling fintechs to get onto financial desktops in a more seamless way. It's currently deployed to around 200,000 desktops in capital markets.
Hi everyone, I'm Doug from BlueFire. We're a capital markets intelligence firm. We specialize in asset risk. We basically identify early signs of company breakdowns for asset managers and banks. We've got product live with several large global investment banks and asset managers, and basically all we do is B2B, so we work with big institutions as a fintech startup. Personally, I also spent about 15 years before this working in big investment banks, so I've experience of trying to build, buy or source the kind of stuff that we now do, so I've kind of seen it from both sides.
Good afternoon, Kieran De Silva, co-founder and CFO of Primary Bid. Primary Bid allows retail investors access to new share issues by listed companies. And we signed an exclusive long-term commercial partnership with Euronext last year. Euronext being the leading pan-European stock exchange, and that's across their 9 geographies in Western Europe.
Right, so now you've met the panel, and as you can hear, and as the session has announced already, these are people all in the capital markets. So we will, of course, be discussing B2B partnerships in a capital market setting, but I'm sure that there are many of the learnings that we can bring into other areas as well when we leave here, and are much cleverer. And also remember that if like a cost to ask a question, I can see them here, I'm told. So for the moment, there aren't any, but as we go along, I hope that you will like to comment so that we can get a little bit of interactivity going. And since you can hear from the companies that we don't have the large incumbents represented on the panel, I thought I'd like to start by asking you to comment why is it that now, when we're talking B2B partnerships, we're always talking about fintechs partnering with incumbents? What is it that you're seeking when you interact with the big existing companies, and how well does it pan out? Does it work well when you start this kind of partnerships? I don't know who'd like to start. We have a few smiles going around.
Yeah, sure. For us, it was really the endorsement of someone like Euronext. We were very keen in the beginning to get our partner to give skin in the game. I think that's very key. If you are a fintech looking to partner, you'll be strung along by a lot of large incumbents. So I think as early as possible, you want to have them to have skin in the game, whether that's investment or like we got the brand license, etc. And once you have that, the leverage that allowed us to go to other large partners, and as we scaled up, both with other partnerships and with other investors, was key to us.
I think from my point of view, I'd say as a general point, because as I said, I've sat on both sides of this, I think we're getting to a point where it's becoming, certainly to me, it seems really apparent that you do need partnership to drive innovation. I mean, a lot of people look at capital markets and wonder why it's behind some other industries in adopting new technologies. The thing that I think we've discovered is there are certain things that a fintech can do really, really well. It can do speed of delivery, it can do scale and cost, it can do kind of unconstrained thinking, and that's great. But there are limits to what the fintech can provide, and I think the incumbents do have value. I think what you need is real partnership where incumbent businesses are really honest about the limitations of what they can do and at what cost and at what speed, and they're willing to outsource and to bring in partners, and kind of, maybe we can touch on this, to treat those partners in a spirit of like a real partnership rather than like a production sweatshop. But I think, like an incumbent changing their mindset to work with partners is a big thing, but I think also as a potential buyer, having sat as a bank and had people come in and try and pitch solutions to me, there's a lot of fintechs who lead with the tech or lead with their solution and they don't really understand the problem. And I think, fintechs need to partner too, right? You need to really understand your customer and what you're doing for them. And also, what is it that you do that they couldn't do for themselves? And be really honest about that. And have discipline around pricing and your market behavior and your business model. And so I think, I think there's been a point where some of these things haven't worked, and I think big industry and incumbents have to change the way they think and be more into partnership. I think the fintechs kind of have to do that too.
Yeah, I definitely echo that. I think it's, there's a movement around general levels of how people think about collaboration, more open platforms to power success across really industry, and that encompasses the large incumbents of the global banks through to the newest of kind of fintech suppliers, and that specialization, and as Doug's kind of mentioned there, that it's you kind of have this fintechs or startups having really focused in a very specialized way, so a much more narrower offering, but it's very, very deep in functionality, very, very highly specialized, and I think much deeper than sometimes the concentration level of what would be allowed in a large organisation for that product to reach that stage of maturity before resources are maybe reallocated somewhere else. So I think those partnerships of bringing in those more specialist elements of startups and fintechs, there's a big willingness, and of course, it's really then a case of how do we make these things work together? What does a partnership and collaboration really look like between a startup firm and a very large organisation?
So perhaps we should take Felicia first, and I'll come back to you, Damien, in just after, if it's okay. Yeah.
Well, for us as a startup, it's because of market impact. What we're looking for is our product to have the broadest reach as possible on the market. We are also regulated. We partner with a number of banks in terms of the products that we provide, and then we deploy that via a variety of distribution channels. So from our financial institution side, they're looking for what's been mentioned, the agility to deliver. But what is probably first and foremost is within a very strong governance and risk managed framework. That's important both to our clients as well as to the clients of those clients. And I would say that comes before anything. I feel that we're constantly judged from a risk perspective. And as a startup, it's something we have to incorporate in our strategy, and how we seek to do that is very important.
So it makes, in many ways, it makes very good sense to collaborate with the incumbent companies for endorsement, for wider audience, for possibilities, but you're often sort of the innovation providers. How does this look? Because I'm so happy that you are here from MAS, Damien, to tell us how the regulators look at this. What can you as a regulator do to help partnerships and to help develop the markets?
Sure. So you would sense that change is in the air in the regulatory scene when among I'm only the regulator among the panel here and only one in jeans. You notice that change is in the air. No, okay, so back to serious business here. So the MAS has been driving the encouraging fintech, encouraging adoption of technology and innovations in the industry, which includes the capital market space, but of course beyond that, including the insurance, banking space. And if you look at the kind of, we have learned over the last 3 years, 2 to 3 years that we have been driving this scene, as much as the incumbents understand where all the technology, all the various agile solutions, all these various fintechs are able to provide, all the various innovative potentials which they could be applied into their lines of business, be it in the back office, middle office, front office, various angles of which. But there are consistent problems that we have seen over the last 2 to 3 years, which has led us to create partnerships that goes beyond just the part about if we are to create platforms, create opportunities at which fintechs and incumbents can better connect to each other. We need platforms, we need the ability to create partnerships that goes beyond such conventions per se. We have seen issues that fintechs and incumbents face. Most fintechs are unable to expand or reach out to potential buyers of their solutions beyond their home market. That's something that we see very often. And secondly, we have seen that fintechs, in terms of their solutions, it normally does not mean a one-size-fits-all. They are able to apply their solutions easily to anyone who may be keen to use their solution. It normally requires some level of customizations. And the third, relating to more of the incumbents, is that there are internal processes, procedures that an incumbent needs to follow, go through in terms of its due diligence before it is finally able to bring on board a fintech to work with. And that is still no guarantee at which the solution, whatever turns out from that particular engagement cycle itself, not to mention it's horribly long, or the honest fact is that it's horribly long, that particular engagement is going to turn out to come up with any fruitful solutions that ultimately an incumbent can deploy. Now, these are the 3 key things that we have seen that the market faces challenges. And in addition, regulators you do see different practices, different regulatory expectations around infrastructures, things such as cloud services. You'll find that today's various fintech solutions are not designed, are not developed for data centers. They're developed for the cloud. And therefore, regulators similarly need to come up with the appropriate kind of policies that support such usage or adoption of technology itself. So when I talk about the kind of partnerships, it goes beyond just the incumbents partnering, having better platforms to partner with the incumbents between the fintechs, but including solutions, understanding regulators, understanding the various technologies out there, and what do they need with regards to financial institutions adopting such technology. And at the same time, we need to cross over some of those existing issues that fintechs have problems working with incumbents, and similarly, incumbents' processes have challenges in terms of working together with the fintechs, just to be able to get something started and discover whether or not those solutions actually work.
So what are the most important things that you should do, the key principles for developing partnerships in a good way? Because partnerships, as I know, are not new. So what happens since there are trouble? You all say we need each other, we need to make these work. What should we do to make these work?
So yeah. I'll say that. I mean, I think for us, the thing that ultimately we think makes a partnership work is you have to 100% have domain knowledge. You have to understand your customers, and you have to understand their industry and their problems. And I think that goes a whole range of things from you have to know what the problems are that you're solving very, very clearly and stick to that. To you have to really understand the capabilities of your customers and your partners and their limitations. So, you know, there's no point in me building a product that doesn't solve a problem, but there's also no point in me building a product that does something that a bank could do themselves. So I need to understand what can I do that will solve a problem in a way that my customer or my partner can't do as cheaply or as easily. But then I need to understand their workflows, because I could build a great product and then deliver it and no one uses it and it's pointless. So I need to understand the need and the problem, the limitations. I need to know the workflows I'm delivering into. And then I also need to know a whole load of other stuff like budget process, corporate politics, organizational structures, deployment, you know, because ultimately I could get all of the first three things done, but if I don't know how to work that organization and deliver something, I could get stuck in what we call the long yes, which is basically like, this product's great, no, I think it's greater, no, I also think it's great, and it never gets delivered. So, like, I think if you know your customers really, really well, and you have all of those points, you can have a really successful partnership. And I think that's what, so we basically hire people from capital markets firms so we can do that, but if you don't have that domain knowledge, I think it gets really, really difficult.
So basically you're pointing to the fintechs. So anybody else wants to point to perhaps also the incumbents, or Adam?
I think where we've seen it be very successful is where there's structured engagements. I think,
Yes.
you know, with smaller firms with smaller sets of resources, you know, having 20 meetings on the same topic is not very productive, and it's time that, you know, startup companies, that it's very precious for startup companies. I think large organizations, when they're interacting with fintechs and they have a structured engagement around evaluating the product, introducing you to relevant areas that have been very well researched by that large organization in terms of, hey, these are real problems that these areas are trying to solve. They have a matrix, and they make, you know, some, you know, very pointed, very relevant introductions. And then as part of that structured engagement, there's a very clear kind of POC path and so on. That's extremely helpful. It's helpful for both the, you know, the larger firm and also the startup as well. As soon as that process is completed, if you become a customer, and I completely agree with the procurement process comments from both sides, you know, it can be a very long process for some firms. In others, actually, there's a very good kind of accelerated path. We see a two-tier path in some organizations, dependent on kind of, you know, the size of the offering, the size of the contract, and the level of due diligence that's undertaken. But, you know, what I would hit on was, you know, really, you know, what Doug was saying around, you know, you've really got to think about your product. In the earliest part, you have to get stakeholders within these large organizations really engaged in what your product's delivering and what your roadmap looks like. As a firm, we're very creative. We're very, well, we like to think we're creative, and we're very innovative and entrepreneurial, which is fantastic. But, you know, all of our fantastic ideas could just be slightly mistimed. And as we know, that's a real story from the startup landscape, where there's many, many people with good ideas, just slightly out of cycle for them to be relevant to people at any particular time. So the sooner you can get that integration and that discussion going in more of a partnership manner, bring them to the table as kind of product roadmap, discussions and strategy, I think the better the engagement for all in terms of developing that company.
I think from our side, we realised the importance of being laser focused on the problem we were solving with the incumbent. As a fintech, when you meet with incumbents, you'll realise they've got a vast range of problems that they're looking for solutions, and they're more than happy for fintechs to sort of do innovation for them and do a lot of free brainstorming and free ideas and free market intelligence. From the fintech's point of view, the issue there is runway and bandwidth. And if you're trying to sort of just run after every possible lead and see what sticks, you'll run out of both very quickly. So I think being able to very tightly define what the problem you are solving for, and there's a laser focus on that with the incumbent, will mean something actually gets realized.
Yeah, from our side, I agree with all of that. I think we sort of approach everything, and I'm sure everyone does, with like a sort of multiple stakeholder engagement from our side and from their side, because these institutions are very large. There's different people with different roles responsible for different aspects of their governance and sign-off process. The other thing is having some sort of mechanism for you to do the filtering, which is that commitment that's really needed, whether it's a weekly project meeting, assessing where things are going, because at any point in that stage, you as a startup can be dropped like a hot potato, and have been, and then picked up again later down the line. So you have to be aware as to how you manage resources in that kind of environment. Whereas if you were, we were talking about this earlier, if you IBM selling to a big financial institution, you obviously have the resources that can handle 3 years of a sales cycle coming and going and variable demands. I'm sure everyone's faced this. We've had lots of people, actually changes in the heads of the project teams who are running projects for us at financial institutions. So when that happens, sometimes you go back to scratch, sometimes they manage to pick it up. So we also are now starting to work with very large partners in some of the implementation, because our platform in some cases requires integration with a financial institution, and in that case, the bank, if it's a bank, they want experienced integrators. So there are quite a few aspects that have to be considered. But for me, it's that filtering. Like, as a startup, you have to decide what for you conveys commitment long before you have any contractual terms. You can go through, I mean, correct me if I'm wrong, 1, 2 years, sometimes longer, with nothing, no contractual commitment. And if you think you're putting half of your team, sometimes the best minds on your team, on some of these large financial institutions, and nothing can happen. So it's, I find that difficulty of balancing that against very large financial institutions with huge resources at their disposal quite a challenge. And obviously it's down to cash flow as a startup.
Do you want to comment here?
So I suppose at this point, I think the issues, the challenges that the fintechs and incumbents face are all very real. And therefore, I wanted to mention about the one of these initiatives that we have been working together with the World Bank Group, IFC, as well as the ASEAN Bankers Association. Because of all these issues that are really, really pertinent and they're very real, we got to find ways at which gives this partnership and collaborations its best footing. So, and that is why we, together with IFC World Bank as well as the ASEAN Bankers Association, for the ASEAN region itself, we are setting up something called the ASEAN Financial Innovation Network, and which it has, as a product, come up with a API exchange platform which does two things. One of which is about a marketplace at which curated fintechs, best of breeds in the world itself, is able to be discovered on such a marketplace. Today we are very familiar with App Store. So imagine a marketplace that you can actually discover the best fintechs that's out there may be suitable for you. And the other one, I think it's more important as we talk about sandboxes. We need to go beyond the part about a policy type of sandbox, but an industry sandbox at which such test environment can be democratized, at which to allow fintechs as well as financial institutions to better work together before we even come to the stage of the due diligence that we've been talking about here, the contractual stuff. They can come in after you have worked together, the fintechs, to discover whether or not they are likely to work and provide a solution that will meet your needs. I think that's one of the particular areas that, as partnerships, government agencies, regulators, fintechs, and other industry bodies have to come together if we are to make this a success with regards to fintechs and financial institutions better able to collaborate and ultimately, I think, develop solutions that ultimately serve the customers much better.
So this is really interesting because we could have seen this as a battle. You don't listen to us and perhaps we don't provide the right product. We need to understand your customers. So there's you're pointing to both sides here, and there's definitely a question of a learning curve and to get started or perhaps reorient the way that we think partnerships, because some of us have tried to have B2B incumbent partnerships for many, many years, and now the world has changed. But if we were to go in the other direction, because I often hear people saying, well, the fintech are the new innovation departments of the incumbent organization. Well, what do you think about that? Because
Well, obviously, we talked a little bit about this before. But I mean, it's something. So we do some of the work that we do is we're coming up with signals that predict corporate movements. They're very predictive. They're very powerful. So we get asked a lot, relatively early in conversations. Well, why aren't you running a hedge fund? Why aren't you going and just disintermediating customers? Why aren't you going and doing this, doing that, partnering with these guys and partnering with those guys? And it's interesting because there is an element. Given what we've all talked about on this panel, I think everyone in this room and everyone on this panel knows it's frustrating sometimes working with large organizations when you're a small startup. There are a lot of issues and a lot of roadblocks. So every now and again, there's a feeling of like, should we just go do this ourselves? And most of the people that we have in our firm have come from fund management firms or banks. And they're smart people who, I think our conclusion is, have already tried to do this kind of stuff within those organizations. And I think the conclusion that we've come to is it's not that banks and asset managers don't have smart people or all the ingredients to innovate and to be really fantastic. Most of our people come from those organizations. The problem is the legal structure. It's the framework that you're operating in, both the regulatory framework you're in, if you're a bank or a lender or an asset manager, the competitive environment, the management structures you have, the size and the tech debt and the cost structure. It's really, really hard to do those things. And I think what we find is people leave those organizations so that they can be freed of those constraints to look at problems in a particular way and operate fast and unconstrained and in a certain kind of manner. And we kind of talked about it like Animal Farm, right? Our worry is that if you join loads and loads of fintechs together to try and disintermediate a bank, at what point do they become a bank? And do you lose those those benefits? If you are regulated like a bank and you have a big load of teams who have to have a load of meetings and processes, do you become that? And so I don't know. At the minute for us, we probably would stay operating as a provider into that ecosystem, especially because there's established mechanisms for payment, right?
But,
So
but
banks and
even
asset
as
managers.
a provider, you don't see yourself as an innovator for the incumbent, because when we talk about partnerships and we need respect on both sides and commitment on both sides, you're not just sort of the ideation room for, you're actually companies selling, you're a supplier, you're not an ideation.
I mean, I don't want to monopolize, so I'll hand this over. But for us, there are three types of relationships you can have, right? There are incumbents who ignore the startup community and want to build everything themselves. There are those who want to use startups as a production sweatshop and treat them, and it's very much a commercial buyer and seller relationship. And then there are really good, genuine, deep partnerships. And we've seen all three. We have some great enterprise partnerships with big organizations, and when they work, they're phenomenal because they combine the best of everything, right? The scale and the capacity and the speed and the tech. But there's obviously not that many of those out there, and they're hard to find.
Yeah, you go ahead, and then Felicia.
Sure, yeah. So I think, I'd focus in very much as being an extension of those firms and playing a role in that way. There's value creation on both sides around these engagements. I think about one of our large global investment bank investors. They'd made a very clear decision to kind of modernize their technology stack and to move to a kind of web-first strategy. And they knew that they wanted, not to get into it, but like this runtime technology that OpenFin has. And it was really a question for them that it's something they could build themselves, which would take quite a bit of time, would be quite expensive to do. Or they could actually, maybe leverage a third party to do that, i.e. OpenFin. And they can focus on delivering the top level kind of commercial value of their proposition, that client facing value or that internal facing value, which was really, really important to them. And I think that's a great way to think about this in terms of, I think there's different levels and layers of what the bank wants to try and do or the asset manager wants to try and build and do themselves because it's proprietary to them. Versus, where is their external specialization that they can really leverage and act as a true partner. And if you're lucky to get the third one, and then it may result in a really great outcome, which is they invest in your company.
We don't really see ourselves as an innovator sort of extension of the financial institution. We may be, but I don't think any of them see that from our perspective. really what we see from all financial institutions is two things that they're looking for. One is a significant client impact. So in our case, we optimize and we optimize cash, and we provide a whole range of cash management tools, primarily for businesses, but also on the B2B 2X basis at the end for consumers. So the first thing, that's what they're looking for, a better outcome for their clients. And then the second is delivering that with the agility that's needed. And so I don't necessarily think they reflect on us as innovators necessarily, just someone who can do something maybe more quickly within the regulated framework or has delivered it. You know, something that we've done, for instance, just getting up and running for one of our core banks took 15 months. And there's almost no copycat who could take less time. They might be able to develop the tech, but they wouldn't be able to do that with the bank. And so if we go to any other financial institution, they know that immediately. And they know that because that's the way banks operate. So I think one of the things that we haven't mentioned here, which has become important in some of the financial institutions we deal with, is competitive tension. Is in the market, naturally, the institutions that we deal with, they have competitors. And when they see their competitors doing certain things or having specific offerings that benefit clients which they don't have, they recognize that over the next 5-10 years, there's going to be some sort of shift as a result of that. And they may then reflect on the relevant technologies that offer that solution. And if you've delivered it once, you've been proven, you know, to be a sort of a relatively safe pair of hands. So then adds the likelihood of you moving through their procurement channel.
You want a fairly short comment? We are losing out on time.
Maybe just a quick one in the sense of bringing us all back with regards to the part of recognizing it as an innovator for the bank itself. End of the day, it's about being relevant in terms of a solution that a fintech intends to provide to the incumbent itself. End of the day, it has to solve a problem for them. It is about problem solving. And that is the part where it isn't so much with regards to as an innovator or innovation department within be seen as that, but more in terms of making sure that the fintechs are offering real value solutions. And that is in essence the part about not a solution looking for a problem to solve, but in reality is that there are problems that the incumbents are facing, and which the fintechs, by virtue of them having that experience, better and a fresh pair of eyes itself, then it's not encumbered by the existing limitations, are able to see beyond what could otherwise have helped the incumbents.
I would definitely like to continue this discussion because I think I've learned a lot today, and if I should take just one learning from this discussion, it is a sort of old-fashioned respect and to question why you go into collaborations when you do would go a long way. And that's perhaps a learning curve with the authorities to run in here. So I'd like you to join me in thanking this panel for a great discussion and great contributions.